think most people fundamentally understand how mutual funds work. If you have a 401k, you probably have a mutual fund or even multiple ones that you can choose from. And if you're new here, I'm Jessica Inskip. I've worked in finance for 15 years, and I make investing in the stock market actually make sense. Let's make mutual funds make sense. A mutual fund is a shared investment. That should make sense because it's mutual, which means shared between a lot of investors. All of these investors mutually fund the investment. And I'm using 1440's Business and Finance newsletter as my vetted resource. A mutual fund is like its own portfolio. A professional fund manager is going to pick cash, stocks, bonds, and other products to actively manage the fund. They set a goal for the fund, which we call the investment objective. Mutual funds are either passive or active. A passive fund is when the fund manager will attempt to replicate an index or the stock market. Active means they try to beat it. Normally, active funds have higher fees because it requires more management. A lot of mutually funded assets means a lot of diversification. They can specialize their investment objective in specific sectors like tech or only invest in low risk fixed income products. The big benefit is diversification. The main drawback is higher fees. There can be fees charged up front when you sell or even when you sell too soon. And this is because you're buying and selling of that fund affects the other people invested in the funds. The fees are meant to discourage trading them. Mutual funds have something called a prospectus. It's like the user manual of that fund. Read that user manual. Check out 1440 Business and Finance and sign up for their weekly newsletter. It's free. You'll find weekly education topics like this with a ton of resources. You can access it at discover.join1440.com.